Sure, it's very topical, fair to say, and those IPOs are coming through thick and fast. We're seeing 3 a week at the moment. I think the statistics are that over the last 2 years there's been 70 IPOs, and they're all in our space. There are very few mining IPOs and very few large top 50 IPOs. They're all small mid-cap industrial. So of that 70, the average gains on issue price is around 40%, which is obviously encouraging a lot of these other IPOs to also come to market. Concerning for us, and why we are sceptical, always have been, very wary of investing in IPOs, is that of that 70, or from that 70, the first 25, half of those are now trading underwater below issue price. And we think that comes about because companies that are listing, vendors don't necessarily have their interests aligned with the new minority shareholders coming in. They're, particularly if they're a private equity firm, they're trying to maximise their exit price, and and with escrow periods, director responsibilities on a line, meeting prospectus numbers, those factors play out over a 12 to 18 month, 2-year period, after which the companies potentially fall away in a share price sense once investors and analysts understand they're going to reinvest in a business, or that the growth opportunities aren't what they thought they are. So we're very wary of IPOs, particularly again we've got to take long-term views, and we stay invested in companies for the long term, preferring to watch them closely, visit management on many occasions, and get to know their company before taking the plunge. Yeah, sure. We've taken small positions in Baby Bunting, QMS Media, Pacific Smiles, the dentistry rollout story. QMS Media is the outdoor advertising business, and Baby Bunting obviously is the seller of products that mums need for dads need for their newborn. The Baby Bunting is a rollout story that they don't have many stores at the moment. It's a very fragmented market, so they're looking to roll out stores across Australia over the next 5-6 years. Cookie cutter, low risk, that's what they've been doing for a long time, so we quite like that model, albeit with the recent share price rise it's now looking quite well valued. The market certainly appreciated that upside in pricing the stock where they have. QMS Media is benefiting enormously from the migration of static outdoor media across to digital medium, and yeah, that's resulting in very strong profit growth, with around 50% of their earnings next year coming from that digital media space. It's a little brother to the APN Outdoor and New Media, which are better well known and performed very well since listing. We'd argue that QMS Media potentially provides more upside, given they have newer lease terms with the land lords with the premises which they're converting, gives them stronger tenure. They don't have to share the margins at the point of renewal of those contracts. And Pacific Smiles, as I say, the dentistry rollout story, they have around 50 dentist practices around Australia. It's a very fragmented market. They talk for about 2-3% of the total market. The second largest player, the largest player being Bupa, that owns Dental Corp, with about 4-5% share, and they're rolling out 10 centres per annum. So that gives you 20% growth on the store footprint each year, plus they're improving and optimising the centres they already have in the portfolio. So we're expecting very strong profit growth from Pacific Smiles over the next 5 years, and for that reason we've actually taken quite a big position in the stock.